Now, let me introduce Minister Gustavo Figueroa. He will give the opening speech. Mr. Figueroa, you have the floor.
Good morning, everybody, ladies and gentlemen. Thank you for attending this webinar, and thanks to Ernst & Young Peru, EY. The collaboration between EY Peru and the Ministry of Foreign Affairs comes from a long time, almost 10 years, and I understand it will continue for further years. This partnership has brought us benefits such as the elaboration of Peru Business and Investment Guide, Peru's Mining and Metals Investment Guide, virtual roadshows with Proinversión, workshops on key aspects about law, foreign trade, and taxes to enhance investments. All of them useful tools for presenting to the world our important portfolio on projects. Today, the Ministry of Foreign Affairs of Peru and EY Peru have joined efforts to organize this webinar about the benefits of the convention between Peru and Japan for elimination of double taxation with respect to taxes on income and the prevention of tax evasion and avoidance. The agreement between Peru and Japan for having such a convention sums up the great work done by officials of both countries. We are fully convinced this long-expected convention will enhance the trade and investment dynamic in our countries. Now, allow me to tell you a little about Peru and Japan relations. Peru was the first Latin American country and the 14th in the world to establish diplomatic relations with Japan through the Treaty of Peace, Friendship, Trade and Navigation on August 21st, 1873, only 5 years after the Meiji Restoration. We opened the Defense Attaché's office in 2018, an initiative promoted by this embassy and the Ministry of Foreign Affairs that constitutes an element of utmost importance for the bilateral relationship, allowing the development of security and defense issues, as well as the development of specific aspects regarding military cooperation. We have also organized 2 meetings of the political dialogue mechanism for developing the bilateral agenda and reviewing pending on ongoing aspects. On the other hand, Japan and Peru have already signed different treaties on matters about trade and investment. For example, the agreement for the promotion, protection, and liberalization of investment in 2008. The economic partnership agreed in 2011, which entered into force in 2012. By the way, we should also organize some other webinars or in-person seminars if the pandemic is controlled, to analyze the benefits after 10 years of such agreement. In third place, in the multilateral field, we have signed in 2018 the TPP-11 of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, pending its ratification. And now we have finalized the agreement for the elimination of double taxation. It was signed in 2019 and ratified this year, starting its effects in 2022. This agreement stipulates the definition of individuals and companies to be considered as beneficiaries. The taxes covered, the definition of income, and different taxes specifications that the specialists at EY Peru will explain during the webinar. Japan's foreign direct investment in Peru, according to data from the Bank of Japan, amounts to $500 million. Japan is also our 5th trade partner with a total exchange of $2,877 million according to JETRO. We are confident that this new agreement will enormously increase these figures, enhancing our economic relations. Thank you very much.
Thank you very much, Minister Figueroa. Now, I would like to invite our next speaker, Mr. Manuel Rivera, Tax Infrastructure Leader at EY Peru. Mr. Rivera, you have the floor.
Thank you very much, Mrs. Puertas. It is a great pleasure for me to be in this opportunity with you in such an important event targeted to promote private investment by this very powerful tool to avoid double taxation between transactions with Japanese and Peruvian companies. My name is Manuel Rivera. I am a tax partner from EY Peru. I'm also tax infrastructure leader, and we are delighted to be part of this event. Let me show my screen to continue with the presentation. But before that, thank you very much to the Ministry of Foreign Affairs and all the team that make possible to us to bring our point of view about the tax benefits from this tax treaty. I'm gonna show in this moment my screen. Give me please just a second. Okay. First of all, I would like to make some comments about our conditions for private investment in Peru. Before talking about tax treaty, it is important to mention that Peru is such a friendly country in terms of promoting private investments. Not for that, we are ranking in the first places in terms of private investment. So let's take a look of these features. First of all, in Peru, there is not any type of discriminatory. There is equal treatment between national and foreign companies. That would be the case of Japanese ones. Secondly, there is free capital transfer for every type of investment that could be performed within our territory. Third, right to free competition. It is promoted by our government, the competition, to produce goods and services in the better terms for our consumers. Four, there is totally warranty to private property to protect for any type of illegal situation. Five, there is the right to acquire shares of national companies through any type of private instruments, through contracts and so on. Six, a right to have access to internal and external financing. There are many types of very good opportunities to finance, to fund different types of projects in Peru. Seven, right to transfer royalties and profits whenever the head office of a Japanese company would like to do so, for example. And eight, right to carry out operations in both national and international currencies. It is possible to do it with the yen and the nuevos soles and US dollars and euros without any type of exchange controls. There's also the possibility in some cases to having the accountancy in a foreign currency that allows a foreign entity, as would be a Japanese one, to have the same currency for any other type of projects around the world, and in this case, in Peru. Having said that, I would like to make some brief comments about our corporate income tax according to our domestic law. Why this is important? Because the tax treaty recently signed between Japan and Peru specifically provide benefits to reduce taxation basically over corporate income tax. That's why it is important to explain the main features of our tax according to our domestic law. So every type of Peruvian company, and a Peruvian company is one that has been incorporated in our territory, is subject to taxation with a 29.5% over their worldwide taxable income. It means that every type of income, Peruvian source income, but also foreign source income, would be subject to taxation for Peruvian companies. In comparison with that, when we are dealing with branches or any other type of permanent establishment of foreign companies that are situated in Peru, and also when we are dealing with non-resident companies, they are only subject to taxation over their Peruvian source income. It means that in order to be subject with income tax in Peru, the income has to be qualified according to our law as a Peruvian source income. Branches and permanent establishment would be subject to taxation with the 29.5% over the net income, and non-resident entities would also be subject with different tax rates depending on the nature of the income, but basically according to withholding taxes that would be performed by the Peruvian entities that are the clients, the user of the services of the Japanese entities, for example. Okay, and what would be the tax base for applying the already mentioned tax rates? Well, in many of the cases, specifically in the case of the Peruvian companies, it is possible to deduct all the costs and expenses incurred to generate the taxable income. Another important feature is that income tax for Peruvian companies is determined according to the calendar. So in December 31st, it has to be determined what would be the taxable income of the whole period. However, there has to be, or there has to make some monthly advance payments according to the income that the taxpayer is generated over the year. And finally, the income tax in Peru is also complemented by a dividend tax with a 5% withholding tax rate. That is why when we mention which is our effective tax rate, which is the sum of the corporate income tax but also the dividend tax, we always mention that in Peru, the effective tax rate is 33% tax rate. Okay, so as I said, in the case of residents, we have to remember that the taxation is over the worldwide income. But in the case of non-residents, and this is important right now for us, considering that we're going to discuss investments from Japanese companies, non-residents, as the Japanese ones, would only be subject to taxation over their Peruvian source income. So the question right now is, which are the Peruvian source incomes? And we can see here in this slide the different type of income and the corresponding tax rate. Generally speaking, 30% withholding tax rate would apply over Peruvian source income. However, there are specific tax rates. For example, as I mentioned, dividends are subject with a 5% withholding tax rate. In the case of interest, we have to make a division between the ones that come from loans from unrelated parties, let's say, for example, from a financial institution incorporated in Japan. In such a case, the withholding tax could be 4.99%, depending on the fulfillment of some requirements. But if the loan comes from a related party, taxation would be 30% withholding tax rate. Remember that tax rate because later on we're going to compare such rate with the one that the tax treaty could provide to us. In the case of services, the general rule is that they are only subject to taxation in Peru, services performed within our territory. However, in the specific case of technical assistance services and digital services that could be provided abroad, if they are economically used within Peru, in such a case, they are also subject to taxation. The technical assistance services with 15% tax rate and the digital services with 30% tax rate. royalties that derive from the use of intellectual property that is used in Peru are subject to a 30% withholding tax rate. In the case of capital gains, there are also a split depending on where are the shares negotiated. If they are negotiated within our Lima Stock Exchange, taxation could be 0% or 5% depending on some requirements. But if they are negotiated abroad, if they are negotiated privately or in another stock exchange, regularly tax rate would be 30%. And so on. So with this in mind, and before to give a space to my colleague Ramon to continue with the benefits of the tax treaty, just please keep in mind that there could be two types of schemes of different types of transactions that could come from Japan to Peru. The first one in the left side is a typical direct performing of services or trading between a Japanese company and a Peruvian, in which regularly, if we are dealing with a Peruvian source income, what the Peruvian company is going to do to the Japanese one is to perform a withholding tax. In the second one, because the Japanese group would like to incorporate a legal vehicle in Peru, or maybe it is required considering regulatory obligations in our law, the Japanese group will have to perform a constitution of a Japanese subsidiary in Peru, or maybe a branch or a PE. In such a case, the legal vehicle that would be related to the Peruvian client would be, of course, the local subsidiary or the branch or the permanent establishment. So there would be two levels of taxation. First of all, the taxation of the subsidiary or the branch or the PE, and later on, the taxation over the distribution of the dividends that would flow from the subsidiary, the branch, or the PE to the Japanese head office. And in such a case, as I mentioned, the effective tax rate would be 33%. With that, I finish this first part of my presentation. Thank you very much. And of course, I will be waiting for your questions.
Thank you very much, Mr. Rivera. And before giving the floor to our next speaker, I would like to remind all of our participants that there's going to be a Q&A session. So please, you have there the icon so where you can raise your questions. Now, our next speaker is Mr. Ramon Bueno Tizon. Please, Mr. Ramon Bueno Tizon, you have the floor.
Thanks for this opportunity to share some thoughts on the double tax treaty between Peru and Japan. And as Manuel was saying, I'm going to say some words with regard to the active business income and how it is treated in the double tax treaty between Peru and Japan. But first of all, let's say some ideas with regard to the timing. So this next slide. You know, the double tax treaty was signed between the technical teams on November 18, 2019, and it was ratified by the Peruvian government on December 2020. So the double tax treaty established that it was going to enter into force in the 13th day after both countries have ratified according to their internal procedures. So Peru was the last country to ratify, and it was ratified in December 29, 2020. So the double tax treaty will enter into force on January 29, 2021. But this does not mean that the double tax treaty will come into play or will be applicable since January 29, 2021. The enter into force is just a date that is used to know when the parties have fulfilled with their procedure in order to approve internally the text provision that was signed by the technical teams, and the double tax treaty will be effectively applicable since the first day of the calendar year of the following calendar year in which the double tax treaty enters into force. So the double tax treaty was signed on 2019, entered into force on January 29, 2021, but is effectively applicable since January 1st, 2022. Why is this? Because in Peru, the income tax is a tax that if there is any amendment, the amendment is going to enter into force in the first day of the next following year in which the amendment is made as an annual tax. The same for Japan. So for practical purposes, the double tax treaty will be applicable since January 1st, 2022. The enter into force is only a date that could be used for exchange of information between the tax authorities of Peru and Japan. But for the taxpayers, in order to take advantage of the benefits of the double tax treaty, let's say a reduced withholding tax rate, no withholding tax rate, no taxation in the source country, and only taxation in the residence country. All of this is just from January 1st, 2022 and after. With this in mind, let's take a look on the persons to which the double tax treaty is applicable. And as all the double tax treaties following the OECD model, this tax treaty, this convention shall apply to persons who are residents of one or both of the contracting states. But also, the double tax treaty between Peru and Japan is the very first double tax treaty signed by Peru that establishes some provisions with regard to transparent entities. This in accordance to the BEPS plan of the OECD with regard to hybrid entities and transparent entities. And what does the double tax treaty between Peru and Japan says with regard to transparent entities? That in the case of an entity or arrangement that is treated as fiscally transparent under the tax law of any of the contracting states, the income of this transparent entity will be considered to be income of a resident of a contracting state, either Japan or Peru, to the extent that the income is treated in that contracting state as the income of a resident of that contracting state. And also that the entity or arrangement that is treated as a fiscally transparent entity is established under the laws of any of both contracting states, Peru and Japan, or in case it is established under the law of a third party, of a third country. This third country may have a treaty between Peru or between that country and Peru, or between that country and Japan, allowing an exchange of information on tax matters. And also this entity must be fiscally transparent under the law of that third jurisdiction. So this is quite new in the double tax treaty network of Peru. You know that Peru has a very reduced double tax treaty network. We have almost 10 or 11 tax treaties, counting a multilateral agreement with the Andean community. But this provision is the very first provision established for transparent entities and persons to which the double tax treaty is applicable in the double tax treaties signed by Peru. So let's move on the facts. The double tax treaty between Peru and Japan follow the OECD model for double tax treaties, and with regard to corporate taxation, the income is taxed only in the resident entity, in the resident country, unless there is a permanent establishment in the source country. So let's take a look at the concepts that are considered as permanent establishment according to the double tax treaty between Peru and Japan. The very first concept is the fixed place of business. A fixed place of business through which a Japanese company carries business wholly or partly, let's say in Peru, a place of management, a branch, an office, an agency. We will say some words with regard to agency, moreover, factory, and etc. The fixed place of business is the very first concept of permanent establishment as the double tax treaty model for the OECD establishes. We also have the project permanent establishment, intended for building sites, constructions, assembly, installation projects, supervisory activities, in connection with a project or activities that are carried on in the Peruvian territory for more than 6 months. So we have a project with regard to a construction, to an assembly or installation that is carried on in the Peruvian territory, and it lasts more than 6 months. We have a permanent establishment in Peru. The other concept of permanent establishment is the PE for services, the permanent establishment for services. And according to this rule, there will be deemed to be a permanent establishment in Peru if, let's say, a Japanese entity furnishes or provides services through employees or other persons that are sent to the Peruvian territory for the same project, for related projects, for a period that lasts for more than 183 days within any 12-month period. One important issue here is that if we have related entities that are also rendering this kind of services that are connected to this project of services in Peru, we must aggregate the time incurred by this related entity in order to calculate whether the 183 days thresholds has been met or not. And this is very important because what happens if the Japanese entity has, let's say, a branch or a subsidiary in Peru, and the Japanese entity is going to render services, and for render services, let's say to a Peruvian entity, the Japanese entity is going to send personnel, headcounts, employees to Peru. If the branch of this Japanese entity, if the PE of this Japanese entity, or if the subsidiary of this Japanese entity is also going to render services that are effectively connected with this project, it's going to be considered that there is a permanent establishment from the very first day, because the branch or the subsidiary are in Peru in a permanent basis. And they are in Peru for 365 days a year. So it's very important to have this in mind, because if we have a branch in Peru from a Japanese entity or a subsidiary in Peru from this Japanese entity, and this branch or this subsidiary is already involved in the rendering of these services, and Japan is going to send personnel into Peru, automatically there will be a permanent establishment of this Japanese entity in Peru, because the related entity, let's say the branch or the subsidiary, is also involved in this project. Let's go on. Another concept of permanent establishment is the natural resources, activities related to the exploration, exploitation of natural resources located in Peru for a period exceeding 6 months. And the permanent establishment agency, the agency triggering a permanent establishment, let's say a person who is acting in Peru on behalf of a Japanese company and habitually concludes contracts on behalf of this Japanese entity, or even though this person is not concluding the contract, but is playing a principal role, leading to the conclusion of the contract without material modifications by the Japanese entity, there is one which is going to be the final entity signing the contract. And these contracts are entered on behalf of the Japanese entity, are transferring property, producing goods, assets owned by the Japanese entity for the rendering of services of the Japanese entity, is also going to be considered to be a permanent establishment of this Japanese entity. Is this brand new with regard to the permanent establishment of the double tax treaty network of Peru? No. The other double tax treaties signed by Peru, we have almost the same rules. Is this new with regard to the domestic Peruvian legislation with regard to permanent establishments? The answer is no again, because since 2019, Peru has modified its rules of permanent establishment in order to make them in order to have the same rules established by OECD or recommended by OECD with regard to permanent establishment and international taxation. So these concepts of permanent establishment are well known by Peru with regard to international taxation, double tax treaty network, and the domestic legislation with regard to permanent establishment. Once said that, we are going to move forward, and let's take an in-depth side of what Manuel told us a few minutes ago. What about the services rendered by a Japanese company to a Peruvian entity, to a Peruvian user? And how does the double tax treaty helps with regard to granting a relief in taxation with regard to the services? First of all, let's say how services are taxed in Peru. Manuel told this, but we're going to make just to refresh the idea. In Peru, the rule is that if the service is rendered in Peruvian territory, within Peruvian territory, there is a 30% withholding tax, 30%. If the service is rendered outside Peruvian territory, there's no withholding tax at all, 0%. Unless two exceptions, which will come into play, that even though the service is rendered outside Peru, abroad, entirely abroad, the payment will always be considered as Peruvian source income and levied with a withholding tax, the technical assistance services and the digital services. In the case of technical assistance services, when our service is rendered, is considered as a technical assistance service, when there is a transfer of knowledge from the foreign provider of the service to the Peruvian user. So the Peruvian user is able to do the work in the next future, with no need to hiring a foreign entity again. The transfer of knowledge is the key issue in order to say that a service is qualified as a technical assistance service. And technical assistance service, even though the service is provided entirely outside Peru, they are always considered to be Peruvian source income, levied with a 15% withholding tax rate, 15%, opposed to the general rule of 30%. Again, transfer of knowledge in order to qualify as technical assistance. There are 3 exceptions to this rule, that even though there's no transfer of knowledge at all, the service is always considered or is always treated as technical assistance. Engineering services, constructions, buildings, assembly, projects of architectural or engineering entities, investigation and development services, and banking services, financial services, consider or understood these financial services as services rendered for the sale and purchase of a banking entity. In these cases, engineering, I+D, and financial services, even though there's no transfer of knowledge at all, there is always considered as a technical assistance service, levied with a 15% withholding tax rate, even though the service is rendered entirely outside Peru. And the other great, big exception to this rule, in which we have services that are rendered outside Peru, but always levied with a withholding tax in Peru, is the so-called digital services. Digital services are those services that are rendered via the internet, that are not possible to be rendered outside the internet, that are essentially automatic, and that has minimum human intervention at all. Services that are rendered in the cloud, online, that are unable to be rendered outside the internet. And if these services, if they are rendered, even though they are rendered outside Peru, they are always levied with a withholding tax rate. Which is the withholding tax rate? 30%, the general rule. So this is the domestic tax framework for services in Peru. What does the double tax treaty between Peru and Japan that will be effectively applicable since January 1st, 2022 establishes with regard to this? If there is a service rendered by a Japanese company to a Peruvian company, and this service is rendered, let's say, in Peru or outside Peru, doesn't matter at all, and no permanent establishment is triggered. If the service is rendered in Peru, it does not, it does not last for more than 183 days within any 12-month period. If so, no permanent establishment, and the service is rendered by a Japanese company, there's no withholding at all in Peru. So let's take a look at the example. This is a service that is qualified as Peruvian source income, let's say, a service that is rendered within Peruvian territory. Under normal circumstances, let's say up to December 31, 2021, this year, there is a 30% withholding tax rate. So if the Peruvian source income is 1,000, we must withhold 300, and the income to be received by the Japanese entity is 700. Since January 1st, 2022, the Peruvian source income will be always 1,000, no withholding at all, and the income to be received by the Japanese entity is 1,000. Let's say, again, provided no permanent establishment is triggered. And if we are going to send personnel into Peru, we must take care that this personnel into Peru will not stay in Peru for more than 183 days. And if we have a branch or a subsidiary of this Japanese entity in Peru, we must take care that this branch or this subsidiary is not involved in this project of services for not triggering a permanent establishment in Peru. Same rule for services that will qualify as technical assistance, as digital services. And for sure, if there is a Peruvian, if there is a service that does not qualify as technical assistance, does not qualify as digital services, and is rendered outside Peru, there's no withholding at all, even in absence of double tax treaty between Peru and Japan. Let's move on the following. Like, what happens if we have a permanent establishment in Peru? What happens if we have a branch in Peru? Or this is not a permanent establishment, but we can have a subsidiary in Peru, a subsidiary of Japan in Peru, a branch of Japan in Peru. Well, this branch, this subsidiary, will be taxed as a Peruvian resident entity, will be subject to the general corporate income tax rate, which is 29.5% over a net basis. We can for sure deduct all the expenses incurred by this company in order to achieve this income. But let's take, for example, that the Peruvian source income, that the net Peruvian source income is 1,000. We must pay the corporate income tax of 29.5 to 195, and we have a distributable income of 705. We must also make the withholding of dividends, which is 5%, currently 5%, since, I guess, 2016, we have this 5% withholding tax rate for dividends and distribution of unretained earnings. So the income to be received in Japan will be 669.75. This is in the absence of the double tax treaty. What happens when we will have double tax treaty? It will be the same. Why? Because we have a permanent establishment that is levied or taxed as a Peruvian resident again. One important thing to say is if we have a branch, the branch is subject to, which is called the branch tax in Peru. And the branch tax says that at the end of the year, and as Manuel told, the fiscal year is the calendar year, at the end of the year, even though there is no distribution at all of dividends, there's always a branch tax of 5%. If we have a subsidiary, the difference with the branch is that the 5% tax on dividends will be levied upon the effective distribution of the dividends to the Japanese shareholders. And for sure, there is a foreign tax credit that could be used by Japan, granted by the double tax treaty under Japanese rules as well. And finally, let's take a look at what is called the silent partnership contract. And this is another novelty, another brand new issue in Peru double tax treaty networks. For the very first time, it is regulated what is called the silent partnership contract. What is the silent partnership? Well, in Peru is called the Asociación en Participación. And it says, let's say I am a foreign investor and I'm going to be a silent investor. I'm not going to participate in the business at all. And I sign this silent partnership contract with a Peruvian entity. The Peruvian entity is the one who is going to carry out the business, is going to face the third parties, has its own accountability, pay the taxes. And at the end of the day, they are going to pay the profits to the silent partner. This is not a dividend because there is no entity incorporated under this scenario. The silent partnership is not a shareholder of the Peruvian entity. It's just a contract. Why is this important? Because in the absence of a dividend withholding tax rate, in other double tax treaties signed by Peru, when we had this silent partnership, the income or the profits paid to the silent partner abroad, which is resident of a country having a double tax treaty in Peru, was not taxed in Peru, neither as business income nor as dividends. Why? Because it was understood that this income qualified as business income, and the silent partnership does not have a permanent establishment in Peru. So, no taxation at all. For sure, this could be interpreted in another way. There are some tax advisors that say that this is always taxed under the other taxes clause, but there is there is a big part of the practitioners, of the tax practitioners, that say that there should be no taxation at all. And having in mind this is that the technical teams of the double tax treaty between Peru and Japan expressly established that in cases of the silent partnership, there is always going to be taxed in Peru, provided two requirements are met. The income is derived from Peru, and the payment made by the Peruvian entity is deductible for the Peruvian entity. And let's say, if we are going to make an example with a 1,000 of Peruvian source income, the withholding will be 30%, and the total income to be received in Japan will be 700. This is with no double tax treaty, but with double tax treaty it will be the same, because for the very first time, we do have a provision saying that even though in silent partnership scenarios, there will be a taxation in the source entity, in the source country, provided the income is derived from this source country and it is deductible for the Peruvian active partner or the Peruvian entity. With that, we have made a high-level review of how the taxation is in the double tax treaty between Peru and Japan with regard to active income, business transactions, business income. And now we are going to take a look at the passive income and how it is taxed under the Peru-Japan double tax treaty. So, Manuel, please go ahead.
Thank you very much, Ramon. Pretty clear your explanation. And as you mentioned, please, let's take a look of passive income. And when I mention passive income, I'm referring specifically about the payment of dividends, the payment of interest, and the payment of royalties that could go through Peru to Japan, depending of every or of many other types of investments that could be performed in our country. So let's take the example of dividends. And to do that, you may see in the chart a typical investment from a Japanese company that incorporated within Peru a Japanese subsidiary. And let's say that this Japanese subsidiary incorporated in Peru has initiated their business, and because of that has obtained profits and has paid the corresponding corporate income tax. After the dividends that could be distributed to the Japan in the example would be 1,000. With that in mind, let's take a brief look about the rule in the tax treaty in relation to the dividends. And the tax treaty mentions that in this type of passive income, when dividends are going to be distributed from, let's say, Peru to Japan, the maximum tax rate that could be applied through a withholding tax could be 10%. In the particular case of Peruvian domestic law, right now our tax rate is only 5%. And it's important to mention that because as you may see in the two columns in the right side of the presentation, in the first case, without double tax treaty, with the 1,000 after paying corporate income tax of dividends, you may see that the withholding tax in Peru would be 50, and so the income effectively received from Japanese company would be 950. And the same would apply if we have the double tax treaty in place since 2022, because as I said, as the tax treaty rule is that the withholding tax couldn't be higher than 10%, and in this particular case is 5%, the 5% rule would apply. So we have the 1,000, the withholding tax of 50, and later on the effectively distributed income of 950. What happened with those 50 paid in Peru? It could apply as a tax credit in Japan when the Japanese company to determine their income tax according to their worldwide income. Maybe here there would be a difference between having a tax treaty or not having it, because maybe in the first case, without the double tax treaty, those 50 that has been paid in Peru couldn't be applied according to Japanese domestic law as a tax credit according to the corresponding determination of the tax of the year. But having the double tax treaty in place, those 50, according to the tax treaty and to avoid double taxation, could be applied, of course, as a tax credit in Japan. And also, it is important because we don't know what with our future legislation in Peru about it. Maybe our law could change, and maybe in future the withholding tax over dividends according to the domestic law could be 20%. If that happens, we know that for Japanese purpose, the dividends could only be subject no more than that 10% determined in the tax treaty. Okay, and what happened in the loans? In the case of loans, we have two different scenarios. Scenario number one, that is presented in this chart, where the loan has came from Japan through an unrelated company. Let's say a financial institution, a bank from Japan has funded a Peruvian company. In such a case, as I mentioned, when there is not any type of economically relation between the parties, the withholding tax would be only 4.99%. To apply this reduced tax rate, there are two requirements that has to be fulfilled. The first one is that the interest rate couldn't be higher than the LIBOR plus 7 points. If that happened, 4.99% would apply. But if the rate is higher than the LIBOR plus 7, only the excess would be subject with the 30% withholding tax. And the second requirement is that the funds derived from the law effectively come to our Peruvian financial system. It means that the funds could be used in Peruvian territory to develop a different type of project in our country, right? So if those requirements are fulfilled, the withholding tax would be 4.99%. What is the rule in our tax treaty? Well, the rule is that interest couldn't be higher with a 10% withholding tax. Okay, so considering that our domestic law, and if the conditions that I mentioned are met, would states that the taxation would be 4.99%, again, the 10% maximum tax rate wouldn't apply. This is what we could see in the chart in the right side of the slide, when you may see that interest obtained in Peru are 1,000, and without having a double tax treaty in the first column, the withholding tax, depending on the conditions of the loan, as I mentioned, would be 4.99%. So in the example, 49.9. Interest after tax would be 950.1 that would flow to Japan. Having the double tax treaty, again, interest would be 1,000, the withholding tax would be the same, and income received after paying the tax would be 950.1. Of course, if in the example of the loan from a financial institution to a Peruvian company has an interest agreed of, let's say, LIBOR plus 10, the excess would be subject to a 30% withholding tax according to the domestic law. And in this particular case, the double tax treaty would help, because that 30% withholding tax is not going to apply because we have the maximum of the 10% withholding tax. The same situation we can appreciate in this second scenario, in which, as I mentioned, the loan comes from a related party. If that is the case, if the head office of a Japanese group provide funds through a loan agreement to a subsidiary in Peru, the tax rate according to the domestic law would be 30% withholding tax. However, according to the maximum withholding tax rate provided in the double tax treaty, which is 10%, we may see a clear difference in this scenario. First of all, without double tax treaty, we have 1,000 of interest, but a withholding tax in Peru of 30%, let's say 300. So income received after tax in Japan for those interests would be 700. In comparison with the situation in which the double tax treaty came into place since 2022, in which we would have 1,000 of interest, but a reduced withholding tax rate of only 100. So 900 would flow through Japan, 200 more of interest that could be used as fresh cash for any commercial decision or for any business activity that the head office would like to perform in benefit for the taxation of the group. And again, those 100 that has been paid in Peru could be applied as a tax credit in Japan to avoid the double taxation, which is the main purpose of the tax treaty. And finally, in the case of royalties, the situation is similar than the one that we have described in the case of a loan between related parties, because royalties that flow from Peru to Japan, according to domestic law, would have a 30% withholding tax. But the tax treaty established a maximum of 15% withholding tax rate. So with these numbers in place, first column again, 1,000 of royalties, 30% withholding tax for the royalties, so 300, and royalties after tax that would be received in Japan, 700. In the second situation, with the double tax treaty in place since 2022, there will be a clear advantage because the withholding tax wouldn't be 300, but only 150. So after the payment of such tax, the cash that would be received in Japan for this transaction would only be 850, having again the tax benefit of 150 in the example of more cash to perform any other type of activity in Japan. Okay, after reviewing the three examples of the situation of this passive income, my presentation is finished, and thank you very much for your patience. And Ramon and myself are totally open to any type of question that you may have. Thanks again.
Thank you very much, Manuel and Ramon. Those were very comprehensive explanations, and I think the examples are very good ones because it facilitates the understanding of this agreement. It's important what you said, that the effects of the agreement will take place next year. So we have this whole year to adjust, no? The companies can adjust and probably can study more about how to use this agreement. I think we have exceeded our time allocated for this webinar, but if it's possible, we can answer probably one question. We have received one from Claudia Lopez, and it says, non-resident entities are considered the ones not having a PE, but send personnel to Peru to render services for less than 183 days. So please, Manuel or Ramon, I don't know who, Ramon?
Yes,
Ramon, please,
yes.
if you could answer the question.
Yeah. The rule is the following. Whether there is a PE or not, if the service is rendered in Peru, and if the service is rendered in Peru for more than 183 days in any 12-month period, there will be a PE in Peru from the very first day, from the day one, for sure. This is for non-resident entities. I am a non-resident entity, I'm a Japanese entity that is sending personnel in Peru for providing or rendering services, and this personnel is in Peru for more than 183 days. There will be a PE of this Japanese entity, of this non-resident entity in Peru from the very first day. That will be the answer.
Thank you very much. Manuel, would you like to add something? Yes, please.
Yes, thank you very much, Marita. Not for the question itself, just to complement what you mentioned, and it's clear important about the tax planning that Japanese companies, the Japanese group would have as a homework over this year to establish the best alternatives that they may have since 2022. We really believe as a firm that this tax treaty would provide many tax advantages as the ones that Ramon and myself tried to explain over this webinar. And please, if there is any type of support that you may need from us, we will be more than glad to help you in this important tax planning that has to be done in the following months.
Thank you to both. And yes, that's right. We have this year, so companies, enterprises can plan in advance. And yes, of course, if you have any questions after this webinar, you're more than welcome to raise it. You can send it through the emails that we have at the embassy, and we can send it directly to EY Peru. So I think this concludes the webinar. Thank you all for attending, and we hope the presentations were especially useful. I think they were very useful for me and my team. And we have recorded the session, and in a few days, we will post it on our Facebook, Embajada del Perú en Japón. So it's going to be available for all of you in case you wanted to rewatch what we have seen today. Thank you, Ernst & Young Peru. Thank you, Manuel Rivera and Ramon Bueno Tizon.
Thank you very much.
In the next opportunity. Thank
you.
you.
It was a pleasure. Bye.
Bye-bye.